Well, what would you guess? Snapchat earnings report, another complete disaster. At the time of making this video, the stock is down around 30%. Now, what happened? Well, what happened is the business is absolutely not doing great. Who would have expected that, right? Now, remember a couple of days ago, I made a video about how Snapchat will crash the market yet again. I know we all agree that Snapchat should not be compared to Google, Meta, and the others, but we do not control the market, and that's why right now, all these other companies, Google, Meta, Pinterest, Roku, The Trade Desk, etc., are all down 2 to 6, 7% at the time of making this video. Why? Because they're all in this social media ad tech space. And to tell you honestly, it cannot be further from the truth. Let's take this tweet, for example, from a guy called Couch Investor. Disney sets company record with $9 billion in upfront ad commitments, nearly half of them on streaming and digital. Let me repeat that. A company record with $9 billion in upfront ad commitments, nearly half of them on streaming and digital. I end by saying don't let Snap fool you, it's just this word right here. So as always, as we've seen in the last quarter, and by the way, this thing with Disney, it is very good also for the Trade Desk since they have reached a partnership as mentioned in the last couple of videos. But then again, this quarter shows that you should not be comparing a company like Snapchat to other companies that are in the social media industry, plus in the ad tech space, because, well, it's not the same business, it's not the same company, and it's certainly not the same way it works as we've seen right here. It's not like there is no demand. There is probably no demand for Snapchat because, well, we all know my opinion on that. But before I go and have a look at the earnings report and see what went wrong and a bit what went maybe right, let's say, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links down in the description and in the pinned comment. Some of them might actually save you some money, and maybe you might need some if you want to add to your position in this earnings season. So let's have a look here. What do we have? So revenue by geography. So globally it grew 30% year over year. It actually grew also a little bit quarter over quarter. But again, like they said, it came in at the lower end of guidance. Europe grew 12% and also grew quarter over quarter. Rest of the world is still growing quite nicely, let's say 21% and also quarter over quarter. 12% growth in North America and a little bump here as well from Q1 to Q2 2022. As for average daily active users, there's still growth there, but quarter over quarter it is, well, how should I put it, a bit slowing down, especially in Europe and in North America. In the rest of the world, there's still quite a nice growth there. But then again, as with all major social media companies, rest of the world is probably very, very little monetized. And as you can see right here, the ARPU, the average revenue per user, globally it's down 4%, it's flat quarter over quarter. In Europe, it's up 2%, and quarter over quarter, it's up just a tiny bit. In North America, it's up 8% year over year, and also a little bit quarter over quarter. Rest of the world, that's down 11%, and well, that's why you see globally it's down 4%. But you might say, okay, so right now everything I've seen looks okay. It's not the end of the world, it looks okay. Well, if you just looked at this and that's about it, maybe you could say it's okay. But when, not so long ago, the CEO said, well, we can see huge upside, 50% growth, etc., etc., you start asking questions. Also, back when the stock was at its all-time highs, he had no issues with Apple's new privacy changes. And now that the stock has crashed 85%, suddenly those Apple changes become an issue during the earnings call. Now, a couple of extra things here. So adjusted operating expenses as a percentage of revenue. So that's up 16 percentage points year over year. Now, if we talk about profitability and stuff like that, clearly they're not profitable. It actually became worse from Q1 to Q2, as you can see right here. It's obviously worse year over year as well. And as for adjusted EBITDA margin, it has come down from that peak in Q4 2021 to, well, basically just 1%. And then the story continues here, obviously diluted net income per share. Same thing here, it basically peaked again Q4 2021 at a positive 1 cent. And then since then it's been, well, going down, down, down. And now I'm saying this not because I'm short Snapchat, I'm never short a company. I just don't like it when one company gets used to compare all the other companies out there. It makes no sense to compare Snapchat to Meta, to Google, to Roku, to the Trade Desk, or even Pinterest. Because even Pinterest with Ben as a CEO, obviously now he's not the CEO anymore, but even when he was the CEO, first of all, they're cash flow positive. So that's good. Yes, monetization could have been better. Yes, they have lost a couple of million of monthly active users. But then again, the business itself was still profitable, free cash flow. It was run much better than Snap here. And we're slowly nearing the end here. So operating cash flow and free cash flow, again, the same story here, peaked Q4, then it went downhill very, very fast to Q2 2022, negative operating cash flow, negative free cash flow as well. And then the cherry on top of this disastrous cake, financial guidance. So given uncertainties related to the operating environment, we are not providing our expectations for revenue or adjusted EBITDA for the third quarter of 2022. Not surprised there, even last quarter when they did give us guidance just a couple of weeks after they gave us, they, well, readjusted that and they said that they're probably going to meet the lower end of that guidance. So makes sense. And now one last thing before I end this video is obviously all the downgrades that happened since that earnings report. So as you can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, probably another 2, 3, 4, probably around 15 downgrades since last night. So to end this video, you probably know my opinion on Snapchat by now, not just from this week, but from the last couple of quarters as well. I don't like to compare Snapchat to these other companies, not because I don't own Snapchat, but I do own the other companies. Those are just very, very different businesses out there. And I think most of us can agree that just not comparable. Now, next week, we have a bunch of other companies reporting, Facebook, Meta platforms. One of them, it remains to be seen what happens there. But if we can take a lesson from the last quarter, Snapchat will not decide how well the other companies are still operating. So that's about it. Do share your thoughts down in the comments below, and if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.